Hello trading friends, and welcome back to Forex Focus, brought to you by tastyfx. Taking a look at the British pound here today, seeing quite the resurgence against the US dollar in recent trade for a number of reasons that we'll outline in just a second. But I do want to start with more of a historical piece on this very important major Forex pair between the pound and the US dollar, as the UK and US economies have probably been two of the top three most important economies of the last century, maybe if not the two most important major economies across the globe in the last century. And you can see here for the last few decades, we've never seen a pound dollar under parity or even at parity. We actually got the closest to it in 2022, just a couple of years ago, which we'll take a look at in just a second, the reasons behind that. But this might be surprising to some, given that the U.S. has really become the leading economic power by a pretty wide margin when you're looking at almost any metric, whether you're looking at GDP or employment, or even interest rates, which we'll get to in just a second, which also can signal a currency's strength. In recent years, the U.S. has been the leader in interest rates to the upside. So many reasons that you might think this dollar has taken over the pound and won this battle over parity, but we've actually never seen it in the history of these two currencies. And in fact, as recently as 2007, a pound has been worth more than $2 US. Now, we're pretty far from those heights, as you can see here. The last couple of years really trading between $1.20 and $1.40, especially since Brexit back in the 2015 timeframe, and that's when pound really lost a lot of its luster. But you see a general trend lower in the pound over the last several years, but never quite reaching parity, although it got down to 105 just a couple of years ago. That being said, this market's bouncing back off of that low. And let's actually dig a little bit deeper into the time period where we did hit that 105 low, as the pound has bounced back more than 20% since 2022, when it reached 105. And you all might remember that there were a number of things going on at that point. Like I alluded to earlier, the US was leading in interest rates to the upside, and the UK central bank, the Bank of England, hadn't quite caught up to the US, or was just at a little bit of a slower pace, and we'll show you that pace in just a second. And you were also, as you can see here, continuing to see the after effects of this post-Brexit UK economy that's just been really volatile, for lack of a better term. I mean, this is a market that, as you can see here, since 2008, 2009, has gone from trading above $2 to all the way close to parity at 105. Like I say, not quite getting there, but a lot of jumps back and forth and a general trend lower. Now, we are seeing a bounce back in this pound, and the potential to get to that $1.40 upside that we've seen in recent years, but maybe even back to its prior glory above $1.50, as we just showed you in that historical chart. A lot of time has been spent historically, going back more than 10 years ago, pre-Brexit, in that $1.50 to $2 range. We'll see if they can get back to 140 first, but a couple of things going for this pound in recent trading, hence the bounce back off of 105 and now extending closer to 130. Let's start with the interest rate piece, because this is essential to any currency's strength. And you can see here very similar trajectory, although if you can look a little bit closer, you see that the slope of that U.S. rise is just a little bit higher than that of the U.K. They started hiking interest rates a little bit earlier than us in the U.S., as of course you remember the last 5 years or so has been something like pandemic hits, economies fall, and then economies come back, and then economies really come back in the 2021 timeframe, and then inflation sets in, and in 2022, central banks are by and large raising interest rates to combat that inflation. And so the UK started a little bit early relative to the US, but the US got up and beyond 5% faster than they did in the UK. But both central banks have been holding unchanged for the better part of the last year. And even though the US has been the leader in the interest rate space, the Bank of England is only 25 basis points off of the US. And some of the resurgence that we've seen in recent weeks is because the Bank of England, which has been expected to cut for the first time in years and years and years, they are now looking at maybe not cutting in August and punting on into September. And those who watch this stuff closely will know that, September, that's when the Fed is expected to cut. And so now you're seeing this pound regain some strength that was maybe lost on the idea of, the Bank of England, they didn't get interest rates as high as the U.S., and now they're going to cut before the U.S. does. And just as a quick aside for those out there who don't understand the relationship between interest rates and currencies, a higher interest rate, especially among major currencies like the dollar and the pound, that aren't necessarily dealing with hyperinflation. Some countries can have really high interest rates because of problems that are going on in that country. When we're talking about major economies like the US and the UK, a higher interest rate can usually mean greater demand for their currency to invest at that safe and high interest rate. And so, like I say, if the Bank of England, if their timeline more or less aligns with the Fed, and maybe, you've seen some recent data out of the U.S. that's been pretty volatile itself. If the UK interest rate can actually stay around 5% longer than in the U.S., maybe that pound can get back above 130 to 140 and beyond that prior goal that we looked at a little bit earlier. Another piece to look at is also just the general economic temperature. And you get a lot of that with your GDP growth rate or GDP per capita, however you want to look at it. And this looks pretty rough, right? You see this descent coming out of the pandemic where we saw a lot of major economies witness 5, 6, 7% GDP growth. The UK has gone down to around zero for the last several quarters. Until that most recent quarter, it may not look like much, but that 0.7% that they saw in the first quarter of 24, and that number was only confirmed a few weeks ago, was actually initially thought to only be 0.4%. And over the last couple of months, it has been unexpectedly raised higher by the actual data that's come in. So better growth than expected in the UK, even though, like I say, it doesn't look like much, 0.7%, but coming off of 2 negative quarters in a row and an expectation to be around unchanged, once again, that's some pretty good growth. And I know we don't have the U.S. GDP growth rate here, and if you look at it, you're going to see that the U.S. has had a better GDP growth rate story the last several quarters, but opposite story. U.S. GDP growth rates trending lower in the same time that it might look like here the UK's has bottomed out and is bouncing back. Once again, aligning with that pound story, that pound bouncing back in the same time. Another piece here that's a little bit less tangible is the election cycle that the UK just went through. And I definitely don't think it's any coincidence that you've seen this pound rally in the course of the last week, as it's been confirmed that the Labour Party had gained a majority over the Conservative Party for the first time since 2010. And without getting too political, it's always hard to pin politics as being, a steadfast rule of, liberal parties tend to do X, Y, and Z, and conservative parties tend to do A, B, and C. Very hard to actually align a story or data with that. But it's, I think, no coincidence here, at least in the short term, just because you definitely saw the coordinated effort of the pound being devalued against the US dollar and a number of other currencies as the Conservative Party brought about Brexit and everything else in 2015. We showed you that historical chart that we'll show you again in just a second. But that's when you see that pound really break down from trading in the $1.50 to $2 even range to the last several years, as the Conservative Party has been the majority party in the UK, trading more between 120 and 140. Just on the idea, once again, that not that any political side is better or worse for the currency, but it's been more a story of stability in the UK context, always so important for these things. And so a couple of stars aligning here, bringing the pound back from those lows of 105, 20% rally to where we're at today near 130. Can they get over the hump here? Will the pound continue to get stronger? Well, that's going to have a lot to do with interest rates and employment and economic data, especially in the short to medium term here. We are at this inflection point globally among the major powers, US, UK, Euro area included, whereby it looks like we have reached a peak of interest rates globally. Like I say, the last 5 years, pandemic, interest rates go to zero, economy rebounds, inflation rises, interest rates rise, and now inflation moving lower across the board globally among the major powers. And now you're seeing interest rates in some major economies already be cut, not yet in the US and UK. That's going to be essential to whether or not this pound gets even stronger. If over the course of the next 6 to 12 months, or even over the course of the next 1 to 3 months, the Fed cuts interest rates by 25 or 50 basis points, and the Bank of England only cuts interest rates by 0 to 25 basis points, you could see this pound really get a lot of demand and get an influx of bullish price action here. On the flip side, we've seen this story before. We've seen the bounce off of 120 or 115 or what have you over the course of the last couple of years, and this pound market get up to 130 and then give back those gains. That could very well happen here. We could see a weaker pound if the Bank of England does end up cutting interest rates by more than the U.S., and that's going to have a lot to do with the employment market. So continue to monitor UK employment change versus the U.S.'s non-farm and their unemployment rate, and also continue to watch those GDP numbers roll in for the next quarter. That's going to have a lot to do with this story. But yeah, a lot to take in here. Pound has historically been stronger than the U.S. dollar, although it hasn't been back at those heights of $1.50 to $2 plus in more than a decade. We'll see if they get back there. It's going to have to be a coordinated effort between all this economic data and maybe the new political party that's at power in the UK.